let's talk about saving and how to properly allocate that. When the Fed was raising interest rates, Americans pumped $2 trillion into money market accounts, raising assets in those accounts to an all-time high of $7 trillion. Now those rates, they have been going down the past couple of months. So where should that money go next? Some will probably put it back into the stock market. There are some who believe even more will go towards bonds. Bonds haven't been in the conversation for quite a while now. So should this be something that pre-retirees, those in the red zone, should be looking at?
Yeah, great question. Is now a good time to buy bonds in looking at, 2025? So, if you've been following the show for quite some time, we've been giving you advice regarding the outlook in the bond market for quite some time, being very cautious when interest rates were near record level lows and, cautioning investors. But now that interest rates are starting to head back down, you've seen money market accounts, quickly drop. And so investors, I guess, are looking for other options, other alternatives. And, bonds could be one of the choices on what you're looking for. The first thing that I would say is, for you being a listener, one of the things that I would encourage you to do is take advantage of getting a retirement team action plan put together for you. And in that team action plan, what we will do is we will provide you with an independent portfolio analysis. And that independent portfolio analysis will take a look at doing an analysis to determine, if bonds could be a good mix for your overall portfolio. When we look at it and you're thinking about, bonds and what type of allocation should be in bonds, the things that you want to take a look at would be interest rates. The current trend right now is they have a plan to continue to maybe cut interest rates in the near term. And usually when interest rates go down, bond prices do go up. The second is you want to look at yield. So in the open there, they talked about investors maybe getting away from money market accounts because the rates have been coming down, maybe utilizing bonds as an income feature for some of the yield that's out there. If you use the aggregate bond index as of January 2025, the yield's about 4.5% on what you see in the aggregate bond index. So in some cases, it is a little bit more attractive when you're looking at trying to make your money work a little bit harder than what some of the money market rates that are out there. The other issue that could come back into the equation in 2025 is the issue of inflation. And so in the past, we had talked quite a bit when inflation was high about government I-bonds. And the government I-bond interest rates have come down because according to the government, they've got inflation under control. The government I-bonds up until April 30th of 2025 is at 3.11%. So not extremely attractive, but if inflation does come back and increases, those I-bond rates could go back up in May. You want to think about bonds and understand that bonds are a loan from either, the government, it could be a corporation or a municipality. And you want to think about where we're at in the economic cycle right now. Again, being in the economic cycle, the risk that we have in investing in bonds is if we head into a recessionary environment, you'd want to really maybe consider looking towards the quality of the type of bond that you own. A lot of investors will, maybe chase some of the higher yielding bonds out there, but a high yield bond typically is something that's offered from a corporation that maybe doesn't have as high a quality, as good a credit than what some of the higher rated bonds that are out there. So again, consider that the economy could take a downturn in the future. Make sure that you know what you own. You want to have that portfolio diversification. What we call and what we put it together is, portfolio optimization. Again, in that retirement team action plan, when we put that together for you, it'll show you what your portfolio diversification looks like. It'll show you what your optimization is. Also in that, opening segment, Chris, you had mentioned about investors maybe moving out of money market accounts back into the stock market. And the concern about that is it would go down to when, somebody's going to need the money, what the time frame is, what the time horizon is. So short term, if you think you're going to need that money in the next, 1 to 5 years, putting money into the market while the market is at a relatively high point, could be dangerous unless you have a longer term time frame of when you're going to need that money. Then, Comparing that to some of the other alternatives that are out there, so you could consider other fixed investments. That could be things like locking in an interest rate for a little bit longer. You could do that in an FDIC insured bank CD. You could also lock in a rate through a fixed annuity, which there's insurance companies of America offer, 1, 3, 5, 10-year money market rates or annuity rates that, can lock in that rate for a little bit of a longer period of time. The other issue you'd want to look at is, from a tax consideration, there are certain types of bonds that tend to be more favorable tax-wise. As an example, a municipal bond may offer some tax-free income if it's owned in a non-retirement account. So again, when you're deciding what to do and you're deciding how to develop your asset allocation portfolio, jump to the front of the line, get together with us, start off 2025 on the right foot by getting that retirement team action plan. We will provide you an independent portfolio analysis and talk to you about portfolio optimization and how to put that together so we can help you determine, what could be the right mix for you in 2025.
It's as simple as reaching out and setting up a time to speak with the team at America's Retirement Headquarters. So many people view retirement as this one chunk of time. We're talking 20, 30 years. There's lots of different portions of time in there. And so you're going to need your money to do different things. What they say about putting your eggs in one basket, don't do it. And so finding the way to make your money work as efficiently for you as possible is part of that retirement team action plan. That all begins with that phone call, 419-794-3030 to set up a time to speak with them, 419-794-3030, or you can go to the website, find out more about the team, and set up a time there as well. That is arhq.com.